Howdy from South Texas, everybody. I'm here with my mascot, Leppy the Leopard. Anyway, welcome back to my channel, which teaches you tax savings strategies. And I have another one to share with you in this video that is very seldom used. I covered another one in a previous video of a tax strategy that's very seldom used, and that was called the 1031 exchange. This one is called the low-income housing tax credit or affordable housing tax credit. And the way it works is Congress pre-funds X amount of dollars to pay out as tax credits to investors in these kind of investments. Yes, it is an investment, and you have to work with a qualified investment broker, or there's many names for them these days: registered rep, investment broker, stockbroker, etc., etc. But most of the major companies will have, I'm talking about brokerage companies, will have a list of companies that they sell for. They have selling agreements with these companies to sell these housing tax credits. But keep in mind, these are investments. So how does this all work? Well, a company gets money from investors like you and me. We'll put our money in this investment for affordable housing tax credits. And what's the advantage, or what's the tax benefit? The tax benefit is the tax credit. So these companies are involved in housing projects that build new housing structures for the low-income community throughout our country, throughout the United States. You get the benefit on usually a table, a timetable, because these housing projects take time. And in that timetable, in the disclosure statements that you get from the investment company, it will show you the projected tax credits per year, the beginning and the end. Because these tax credits don't last forever, because the tax credits are only there while in the housing project phase, while they're in the building phase. Okay, so and again, these are brand new housing projects. They're not, as you may be familiar with the term, projects in many movies, or maybe you're familiar with it where you live. It's not these rundown, shabby looking places. No, these are very nice looking housing projects for low income tenants. What's the benefit aside from the tax credit? What are you doing? And you have to think about it this way too. You're helping low income people get into affordable housing. That's why it's called affordable housing tax credit. But these are usually brand new housing projects. Okay, so the way the tax credits work is it offsets your tax liability dollar for dollar. So on your tax return, there's a line that'll say tax. And then after the tax is computed, any credits that you're available to have offsets that tax dollar for dollar. Okay? Now, if you have no tax to pay, you don't use the tax credit because you have zero tax already. So generally speaking, higher income investors take advantage of these tax credits because yes, they usually end up with a tax due on their tax return, and you're looking for ways to reduce your tax. And here's another way to do it: affordable housing tax credits. Email me, set up a phone appointment. We can talk more about it, or in my network of financial planners, I can steer you in the right direction to get the help you need. All right, that's it for this video. Thanks for watching. Take care. See you next time.